Hi everybody, Brian Shannon here from alphatrends.net. It is Friday the 10th of April 2015, so let's look at these markets, where we've come from and where it looks like we're most likely headed. The equities markets did gain ground this week, except for the commercial real estate index, which lost 2%. But basically across the board, it was a pretty solid week for equities and also for oil, which we'll take a look at. The S&P 500 is right up against what's been this little trend line for the last month or so, and as we know, it's found the support at what's been the 50% retracement of the year-to-date range. I'll draw that in right now, and also the volume-weighted average price year-to-date in that same area. So now that we're up against this little, let me just change that, but we're up against the trend line here that we've seen over the last month or so. It is getting a little bit extended, but the momentum is clearly higher. This is just a level to be aware of as far as potential resistance goes. This week we had strong price activity here, and it did it in a way that we wanted to see happen. That is not necessarily this gap lower, but the rally up to that prior little area. We broke very briefly through it, and as I told people, we don't want to chase it. It pulled back down exactly to the rising 5-day moving average, and when it broke this point right here yesterday, that's where I was telling subscribers of alphatrends.net that it was an official breakout for the intermediate term time frame, that the buyers, that's the exact point where they gain control, where we had a higher high above a flat to rising 5-day moving average, and that our stop at that point was going to either go right here if you wanted to keep a tight stop, or if you wanted to keep it wider down near about 207. Now I'm suggesting that those stops are raised, and at a bare minimum, no one allows it to lose money if you bought it at the correct price. The NASDAQ led it just by a brief bit yesterday. We know that it gapped higher on Thursday, pulled back a little bit, and then finished the day strong. And as it got back beyond this resistance, the intermediate term trend here is also higher. The issue with the NASDAQ for me is that, well, not necessarily the issue, but this is going to be an important level. If we start to pull back early in the week, we'd really like to see that 106.75-ish hold. And for the S&P 500, we want to see 208.50 to 208.75. If we hold above that, then I think we can expect to see continued higher prices for the S&P 500. For the Russell 2000, it continues to be the strongest group out there. We've been riding a trend line. We're above a rising 10, 20, 50-day moving average, and we're seeing that it holds up very well here. We've kind of grinding higher here in the Russell 2000, but still higher nonetheless, and it is of course in a very strong uptrend, very close to all-time highs here. So it remains innocent until proven guilty, and this is about 123.50 to 123.75 is what we're going to want to see hold as support for now. For the semiconductors, I've been looking at these kind of as a little bit more neutral because of the daily time frame is really kind of a little bit more messed up looking. And it's good to see that today we did breach this high here from about 2 weeks ago, but I would prefer to see this market pull back a little bit before we were likely to see a bigger move that we could have a little bit more faith that it could hold. Keep an eye on this trend line next week if we do continue to move higher, but for now we'd like to see any pullback hold between 55.50 and 55.75. really, that's what I consider to be the important band of support going into next week. The financials are really, we can start here on this as a 65-minute time frame, and I've got a 5, 10, and 20-day moving average. You can see that this has been a really important band for the band of trading, that is, for the stock, that we've seen it holding as support most of the time, and then now as resistance. And this has been basically for the last couple months. This is that midpoint of it. So I think maybe next week we get back above this little, probably $24.30 to 35 cents. That's our little band of resistance for right now. That if we can break beyond that, perhaps we see another push towards the high end of this range. But looking at the daily time frame, you really kind of realistically have to look at it as a little bit more neutral than anything there. Let's take a look at oil for a moment. A lot of people talking about oil. It's still in a primary downtrend at best. As I said last week, it's starting to find a little bit of support, and that this was the important higher low we wanted to see hold if it had a chance of running up to this prior support area, which has been acting as resistance. And it it pretty much to a T. That is, run right up to that level. Now we've got what looks like a higher low. I think that if you're long oil, in this general area, this is where your stop probably should go. That's where I would suggest it because, again, in the primary downtrend, if they don't scare you out, they'll often wear you out. Here's how we look on the intraday time frame. These are 4-hour candles, and that's that first higher low that we had mentioned last week at 47. Now I think basically about 50. So you could maybe say $49.75 to $50 a share. If it can continue to hold that, perhaps it can push beyond this little band of resistance at 53.90 to 54.10. And if it was to do that, then perhaps it could make it up to the next potential level of resistance near about 57 or so, 58, I guess. But either way, the primary trend is still lower, and it's needing to work that out. The bonds this week kind of neutral in here, but they're holding above the prior resistance still, so that's good to see for the bonds. But again, the commercial real estate index did lose some ground here, so that's just something to be aware of. Other indexes, the biotechs have been bouncing at that 50-day moving average and had a strong week here this week. They were up on a percentage basis. Where were they? They were up 5.2%, so it continues to be the strongest group out there, obviously. And this just the fact that we have the 50-day moving average and we've come to this level a couple times, that really adds to the significance of that level as a support area, and it seems as though it should be able to continue to hold that. Apple is improving. It is continuing to hold above this rising 50-day moving average, and that's no coincidence, as a lot of people are trained to buy at the rising 50-day moving average. But it's been really holding it well. On an intraday time frame, we're seeing that it's getting more constructive here. We have these higher lows coming into the stock. We've spoken about this little trend line here that's been acting as resistance, and you can look at that and say if it can break probably beyond and hold beyond pretty much 128 to 128.30. I think if it can get above that next week and hold above it, then it sets the stage for this stock to be able to continue to move higher, breaking this little resistance. The thing is, as I tell people all the time, it's not just the breakout, it's how it gets there, and then if it holds it. So if it was to run straight through that on Monday, I wouldn't be as excited to see it hold, to buy it, that is. I'd rather see it run up through there, pull back, create a higher low, and then buy the next strength with a high just underneath that higher low. So it's setting up, and we'll continue to monitor that each and every day at alphatrends.net for all levels of subscribers. Shares of Amazon actually look like they're setting up this beautiful little launching pad here on the weekly time frame. It's been really holding up tight since that gap higher and the subsequent move up. It's above all the volume weighted average price levels that are relevant. It broke some important resistance this week, basically between 380 and 381.5. And today we saw it pulling back towards that level. So I think you really want to keep an eye on Amazon now that it's above that rising 5-day moving average. And ideally, we see this level really probably 380 to 381.5. That's really what we want to see hold as a band of support. If we can do that, pull back down towards that level, kind of turn sideways a little bit, and then get moving higher, I think you're going to see that Amazon has it in it to probably make it up towards about 400 here in pretty short order. Shares of Alibaba continue to be a dog. They were up this week, and they made it. Had two very strong days actually on Wednesday and Thursday. Today they pulled back, and as should be expected with a declining 50-day moving average. These rallies, you can trade them for for a couple days or so, and there's nothing wrong with that. But the question is, will it hold here? And most likely, with a declining 50-day moving average, the answer is no. It's possibly part of the bottoming process in here, similar to oil, but there's nothing bullish about the setup in Alibaba. DHI is an interesting one. DR Horton broke some resistance here, multi-year resistance for Dr. Horton, and you can see that it is on the daily time frame. This resistance was tested and held as support this past week, and DR Horton may be back above this little band of resistance. Could get going. Set the stop where you're comfortable with. Worst case stop probably he goes down below this level here. That's our most recent relevant higher low, if it does make a higher high above this band of resistance. And then finally, Facebook has been getting a lot of attention. It had that big breakout middle of last month, and that little band of resistance is still holding as support. When we look at the weekly time frame, we can see, obviously it's had a big run, but that resistance that it broke past is holding as support. Right now, there's no reason to be long Facebook. I think that this is really the key level for next week, is right around that 83.50 area, 83.40 to 83.50. It's going to need to get back above that and hold above it to think that it can continue to move higher. And again, what we want to look for is the ideal scenario, which would be that it kind of rallies up towards that level, maybe briefly, breaches it but if it were to get through and it was extended at that point, I would prefer to see the pullback, get that 5-day moving average beginning to rally, and then buy the strength with a stop underneath whatever a higher low would be. Either way, I hope you had a good week of trading, and I will talk to you again next week.